Truth Plus Media.
Hello again, everyone, and welcome to another edition of Iconic Sonics. I'm Mike Gastineau. Iconic Sonics is brought to you by Rise Above. Rise Above, a nonprofit organization that educates Washington's native youth through sports and especially basketball. Learn more about their great work at nativeyouthriseabove.org. Iconic Sonics is also brought to you by the legendary Edgewater Hotel, Seattle's only overwater hotel. The Edgewater is the official hotel of Sonics fans everywhere. Our show today is also brought to you by the Queen Anne Beer Hall and by Epic Seats, trusted local business with tickets to the events you love. EpicSeats.com. Nothing beats Epic Seats. And our Iconic Sonics media partner is Seattle Magazine. And normally on Iconic Sonics, we focus on the court with great basketball stories. But today, we're going to focus on the business side of the potential return of the green and the gold, the massive TV deal involving the NBA right now, the new collective bargaining agreement, the numbers involved that will ultimately make a deal in Seattle work. With all that info and this week's guest, here's my Iconic Sonics partner, Chris Daniels.
All right, thanks, Gas. I have the pleasure now to talk numbers and with Kurt Badenhausen, who's the sports evaluation reporter for Sportico. Before that, a senior editor at Forbes from 1998 to 2021. He's the guy that everybody likes to tweet the numbers from when we talk about a sports team valuation. He co-engineered all of that at Forbes, has launched numerous initiatives at the company, and now at Sportico again as the sports evaluation reporter. We're going to talk numbers. Kurt, thank you for doing this. Really appreciate it here on Iconic Sonics.
Oh, I appreciate you having me on. Looking forward to it.
Well, I love the business side of sports. I think anybody who has talked with me over the years about this particular subject, about the NBA, about the NHL as well, knows that I love the business side. Having that depth of the conversation, I think, allows you to appreciate the numbers, things like cap space. When people talk about cap space, I guess let's get started with what got you interested in this side of sports, this business side of sports, and getting into the weeds and the numbers.
Yeah, well, my first job out of college, I was working at NBC Sports on the production side, and thought a life in sports TV maybe wasn't what I was looking for ultimately, because you had to work on every weekend and every holiday. And I got a job as a reporter, entry trial job as a reporter at a place called Financial World. And we traditional financial magazine that competed with Fortune, Forbes, Business Week. It's the oldest financial publication out there. And we've kind of found a niche where we saw that sports business was just starting to become an area. And the reason it was starting to become an area and something people were paying attention to, because the money was just starting to get substantial. This is in the mid 1990s. Before that, the only thing that people really paid attention to were player salaries. It was kind of the only time you saw a dollar sign attached to sports. In the newspaper or in a magazine. But the money, because of media, was starting to get real. And so my longtime colleague and partner in crime, Mike Ozanian, the year before I'd gotten to Financial World, he had launched this idea of valuing sports teams. And so we ran with it and did it at Financial World, did it at Forbes, and now doing it over at Sportico.
Yeah, how do you break down those numbers? And this is my curiosity, because they get repeated every year. I think there was a recent data point that the Mariners are now worth $2.2 billion, and we have seen franchise valuations go up. But you're using a complex series of tools when you're coming up with those numbers, right?
Yeah, we try to apply as much science to it as we can, but it's not a perfect science by any stretch. There's some art and some science, and what something's worth is what someone's willing to pay for it. Zillow puts a number on your home. Is that the number that you're going to sell your house for? Not necessarily. Could be higher, could be lower. You really don't know. So Zillow's taking a lot of data points and putting it into their algorithm to try to figure out what your house is worth. And that's what we're doing really with these valuations. We have many fewer data points though, because there's a very limited number of these teams, and each sale is very unique. So it's hard to extrapolate the sale of the Utah Jazz. What does that mean if the New York Knicks went on the market? I don't know. Or the Phoenix Suns went on the market. Yeah. Revenues in Utah and Phoenix, not that much different. Utah sold for $1.66 billion. The Phoenix Suns valuation is $4 billion. Now, that is a unique sale because it wasn't 100% of the team. If 100% of the team had to be bought, it probably isn't a $4 billion number on there. But there was a situation where there was a buyer and had, $2 billion to put towards a team. And so the fact that he got 50-something% instead of 80-something%, it's okay, controls the team. To simplify it,
yeah.
You don't become a billionaire by giving money away. And Matt Ishbia is a very successful businessman. But so we do our best, and what we do is really dig into the financials, and we focus at Sportico on revenue on the team side, because bankers still look at these teams on multiples of revenue. They think about the cash flow, and it's not an irrelevant number by any stretch, but traditionally sports teams have been valued on multiples of revenue, largely because that is a number that can be controlled much easier, and the profit side of things really swings up and down. You might decide you have to pay a big signing bonus, or you might decide to ramp up your Steve Cohen, and you add $100 million to your payroll this year. That's somewhat in your control in terms of what you can do from year to year. But the revenue number is a somewhat stabilized number. And for many decades, most teams didn't make money. So they had to come up with a valuation metric that made sense. That wasn't your traditional PE method that most companies are based on in the stock market. And it's not dissimilar to late 90s internet companies. They didn't make any money, so they had to come up with new metrics on how to value these things. And that did not work as well as sports teams. Sports teams have been a very good investment, as we've seen over time.
And that is all context for why we wanted to have you here on Iconic Sonics when we start talking about the NBA and expansion, the business side of sports. And there is some timing here with this particular podcast, because there was some news that a lot of people, I think, in Seattle who have been wishing for expansion, or Sonics fans that have been wishing for expansion, say, hey, this is a big piece of news. And what we're talking about is the collective bargaining agreement, this new deal between the NBA and the Players Association, the CBA, as we like to say in shorthand, that you're well familiar with. Walk our listeners and viewers through this about why this is a significant piece of the puzzle for the NBA going forward, and also when it comes to expansion.
Yeah, it's a good question. Adam Silver hasn't made any bones about it or secrets. He wants to expand, and I don't want to say all owners. There are owners who do not want to expand 100%. But for the most part, the league wants to expand, and starting with Seattle, I think number one. And but before they get to those conversations, there are two very important pieces that shape the league's economics that needed to be done, and will also help dictate what an expansion price might look like, because once those two things are locked in. First was the collective bargaining agreement, basically the agreement between the players and the teams in terms of how the money is split. There's lots of other factors that go into it, but number one is how much money is going to go from the teams to the players. And it's roughly been a 50-50 split in recent years, and will continue to be a roughly 50-50 split. The pie is getting a little bigger because they're including licensing income, which was outside of what is called basketball related income, which is the revenue number that's used to determine what goes to the players. But for the most part, the partnership has been so wildly successful where you're going to have dozens and dozens of players making more than $35 million a year next season, and even more once these new TV deals are done, which is the next big negotiation that has to be done before they turn their eyes to expansion. And so the next deals run out 24, 25. And those conversations will probably start after this season because they take a little time. And particularly if you're looking to bring in another party, if it continues to be ESPN, Turner, it's almost like a turnkey operation. There's not a lot of change. They're just writing bigger checks. But if you got another partner in there, whether it's an NBC or you certainly have a streaming option in there, they're going to want some time. So these things will be done, not this summer probably, but probably next summer, and certainly by the fall, you would seemingly have a TV deal in place.
So that's your timeline. I mean, there's been talk a $75 billion deal, which seems like a massive number for the NBA. And when you start talking about expansion, it's like, well, if the owners are going to get that much money from their TV deal, why would they ever need to expand? So you think that potentially a deal that size could be done later on this year?
Oh, I don't think my guess would be 2024. You wouldn't see a TV deal before then. I mean, I don't think the conversations will really start until after this current season is done, and they're going to take time. I mean, they're already negotiating the media. Warner Brothers, Discovery is saying they don't need the NBA. That 75 number has been out there from an original CNBC report, and kind of. It was I don't want to say a trial balloon, but it was, I would say, a best case scenario. I think that's probably on the high end, but you will certainly see a doubling, and barring a meltdown in the advertising market over the next 12 months or a significant recession, I would see easily NBA TV rights will double. And whether it's 3x, so that's a big number. But the way the NBA gets there is by carving out new packages. You don't get there with just ESPN and Warner Brothers Discovery. They're not paying $75 billion between the two of them. But if you carve out maybe a third linear package, a streaming package, you can. There is a path to getting there. And to your point, it just makes for a bigger expansion number, because if you are now going to have to give up assuming there's two expansion teams, that's 2/32 of the pie that are no longer going to your team. So the number will be big, very big.
Well, and correct me if I'm wrong, referencing now the CBA, the collective bargaining agreement, I have not seen through your reporting or really anybody else that there's any sort of clause in this CBA for players getting a piece of any sort of expansion fee. That's always been it, no matter what league you're talking about. That's always been something that has been left out of a collective bargaining agreement. I don't see any change there. Do you know of any change?
I haven't seen or heard anything that would indicate that expansion revenue would be part of basketball related income and folded in. It never has before in any of the other leagues, and I don't see that changing in this current format.
So yeah, I mean, for our listeners and viewers who don't know, I mean, this talk about expansion, it's always been the idea that it would be lining the owners' pockets, and the owners would be getting a massive chunk of money from any sort of expansion fee. I'm curious what you think, Kurt, about the argument that's been made by Mark Cuban publicly that he's shown some pause towards expansion because he views this almost as a short-term loan for owners when you start talking about the maximization the TV deals and how much money has been coming into the NBA. I mean, what do you think about this argument that really, given the amount of money that the owners are making off the new TV deal potentially, and now with this collective bargaining agreement, they don't necessarily need to expand?
They don't. They don't need to expand 100%. I mean, and people like Mark Cuban and some others within the league would argue that it's always a bad bet to expand, because you are giving up equity forever, in perpetuity, that you previously had. So to take the money up front is a bad long-term investment if you're an owner. If you're planning on staying in the NBA for the next 20, 30 years, it's going to be a bad return on investment. Now, if you're someone who's looking to get out of the NBA ownership in the next 5 years and capitalize on these big valuations, 100% you want to expand. You want that upfront check. But there is a number, and I think it's important to understand that the markets that you expand to are very important. Are they going to be accretive to the long-term growth of the league? And I think that's very important. Just taking a short-term check is a bad bet. And I think you'd have trouble getting owners buying in for that. But if you can make the argument that adding expansion team X and Y are in the right cities, have the right owners, the right buildings, which are the three main things that each expansion bid has to have locked in place. If those three are all positives, then that's good for the league long term. If you're bringing in more fans, more money long term, then those markets are good. And again, and if you're splitting up $8 billion, that's good too. That is so there is, and that's why we go back to how we started here with the TV number and the CPA number. It kind of locks in what the league's economics look like for the next 10 years for the most part. The TV is an overwhelmingly large portion of your revenue. Sponsorship deals are long-term. Attendance doesn't fluctuate much from year to year. And so really what your revenues are looking like for the next 10 years. So there is a number, and there's all sorts of bankers who will run it through their complicated spreadsheets that makes the owners okay with bringing in two new partners. Again, two new good owners, that opens up a lot of doors also. I mean, the NBA has been, it's a really strong ownership group. I mean, if you look from 1 to 30, with the new owners that have come in and their business backgrounds, it's a very progressive league. It's always looking to kind of what's next, whether it's, they've kind of been the leaders when you're talking about opening up to private equity, now opening up to sovereign wealth funds or other institutional forms of capital through endowments, pension funds. And so they've always kind of been a leader. And I mean, if you're comparing the 30, the NFL's the king of the jungle because everybody watches on TV, it's great, but it's not the most dynamic ownership group, because I mean, the reality is the average ownership tenure is 40 years. You've had groups that have owned them for 100 years in the same families, and they're not necessarily business leaders. I mean, they've been incredibly successful with their NFL clubs, but that's just kind of the nature of the sport, and not necessarily because of these individuals. So I think there's a number out there that makes everybody happy, and you'll have a few owners will clap back and not want this, but I think when you start talking about Seattle and Las Vegas being the clear front runners, I think you get enough people on board that this is a reality.
And you think it makes more sense from a financial aspect for the NBA to expand rather than relocate a team, given the amount of money that we're talking about here?
I I think so, and move. I mean, the cities that get talked about with relocating. I mean, it's the small market teams. It's Memphis, New Orleans. They don't necessarily have the corporate support that the others do, but taking teams out of cities is, as fans in Seattle know all too well, that leaves a long-term scar. Again, these are smaller cities than Seattle, so maybe it's not as deep a scar, and the history isn't as deep in those two cities with the basketball teams because they moved from other cities, so it's not like there's decades and decades of long history in those two cities. But I think removing them is much less preferred than on the expansion side, would be my understanding, and from talking to people in the business, that is really not what the NBA is looking for.
That's a good transition to talk about some of what you've written about in the past. You wrote at length about the Sonics' departure to Oklahoma City, and I want to approach this a little bit differently because the NBA economics have changed, right? Since that team was sold for $350 million. I mean, we're talking about billions of dollars now for an expansion franchise. I mean, since the Sonics left Seattle, how has this league changed economically, in TV, in digital rights, in regional sports networks, which is another variable in this whole conversation?
Yeah, the NBA. I mean, you think back. I look back at this. I look at it from a valuation standpoint. It's what I do, and a lot of. So I think about the framework that way. I mean, I think back to the early 2010. You had a lot of teams trading hands. Bunch of teams were sold over a short period of time. Philadelphia 76ers were carved out of Comcast and sold for $235 million, I think the number was, in 2010, 2011. The team's worth 10 times that now, at least. I mean, the Milwaukee Bucks were just valued over $3 billion in a transaction. I mean, the Milwaukee Bucks have done an unbelievable job in building that arena and building a championship team. But the transformation of the NBA is unbelievable. It has become like the hot league. It is the league that people literally around the world want to invest in. So an NBA team comes up for sale. It's not just the person in Milwaukee that's looking at it, or the Midwest, or the US. It's people in Asia. I mean, people in South America are looking at these clubs. I mean, it's literally around the world, people are interested in getting involved in the NBA. You can't say that with the NFL. So a lot has changed since Seattle moved. The CBA has been transformative in terms of bringing more profitability across the board. I mean, when Seattle left, it was the case where you had a lot of teams that were losing money. The CBA didn't offer enough protections, basically, from owners from spending. And then with the media rights, how they have changed since then. I mean, before this last deal, which was up 200%, the two deals done before that were both done during awful economic situations. They were done during the financial crisis, and then before that, right after 9/11, the tech implosion. That's severely, just the timing, there were two horrible times to do their national TV deals. So the last one was a bit of I think a catch up, and which is why the number was up so much, why it was up 200%, and why some people think it still didn't catch up all the way to where it should be. That again, the 75 billion number is potentially on the table there. And then just as an international property, in terms of the potential revenue generation, it hasn't caught up to soccer in terms of a global sport, but it's the clear number two sport around the world in terms of the revenue opportunity. So that's why you're seeing such huge number with evaluations, because they look out 10, 20 years what this league could be. And it could be gigantic. I mean, and it works so well in the current environment, the TikTok world of just little snippets, everything, everywhere. The NBA is perfect for that.
Yeah, I would agree with you. It's passed by Major League Baseball, I think, domestically and on a global scale behind soccer. As far as since you love these valuations, the Sonics left at $350 million. I mean, what is the zombie Sonics, as people in Seattle like to call them, in Oklahoma City? What do you think they are worth now in that market versus what they potentially would have been if they stayed in Seattle?
I mean, the reality is that in Oklahoma City, it's one of just because of the market and because, as I just said, all these people would look around the world at any team. There's some markets that, like Oklahoma City, is a tough market. It's largely a one industry market, and so that would be a tough one. I mean, there's been a big chunk of the team up for sale for a long time. They can't get a buyer now. LP versus control stake are two different things, but that is definitely in the bottom group of teams. A new franchise in Seattle, forget it. I mean, this is a booming city with a huge wealth concentration. It's in the top half of the league versus Oklahoma City. We have somewhere down in certainly the bottom quartile of leagues. So I mean, the revenue opportunity, Oklahoma City and Seattle, it's not even close.
Iconic Sonics is brought to you by Swinomish Casino and Lodge, located just outside beautiful Anacortes on Padilla Bay. Swinomish Casino and Lodge and their Unibet Sportsbook. You can now place bets on all your favorite games at Swinomish Casino and Lodge. If you're making plans for summer, Summerfest is back on July 22nd. Find your next big win at Swinomishcasinoandlodge.com. Iconic Sonics is also brought to you by Seattle Magazine, the official media partner of Iconic Sonics. You can get information on their great stories at seattlemag.com. And Iconic Sonics is always brought to you by Simply Seattle, the biggest Sonics apparel store in the world. Locally owned by Sonics fans, you get 15% off your order right now with the code ICONIC15 at simplyseattle.com.
Since you know these numbers so well, I'm wondering, for our listeners and viewers going forward, when we talk about the CBA now being done, TV deal here in the future, is there some sort of equation that you think lines up to expansion for Adam Silver and the owners? I mean, is there a number that we're looking at with that TV deal going forward that would say, okay, this makes sense now for the owners to take that next step and expand?
Yeah, I don't know. They have a number. They'll run there's a calculation. I don't know what the number is. I mean, doesn't start with a 3 though. I'll tell you that. It starts with a 4, and I'm sure you can have some owners tell you it starts with a 5. But a $4 billion number. It's if that's what the Phoenix Suns are going to sell for, and if the Milwaukee Bucks are going to sell for 3 something, and you've got an arena ready to go, that's certainly part of the equation too. And we see it with expansion. With MLS was what's been going on right now. We've been waiting to see who the 30th franchise is going to be, and it was going to be Vegas. It was a done deal. And then people started looking at some of the numbers. Well, I got to pay this MLS franchise. I got to build a brand new soccer facility. And because it's Las Vegas and it's going to be 115 degrees, I got to put a roof on it also. So suddenly my soccer stadium is going to cost $600 million, and I got to pay a $400 million expansion fee. I'm in for $1 billion before we start. Now MLS clubs all lose money, so that's a little bit of a different equation. But I think with the building in place right now, you're not asking somebody to pay an expansion team and now also go spend $2.5 billion to build a new arena. Now they're going to have to work with the people that control the arena in terms of who's sharing the revenue, how that revenue share works. But it's a giant number, and not just because of you're getting the Seattle team, but you're going to get 1/32 equity in the NBA, which is they're doing their own investments in equity. They're investing in their own companies, and they've got NBA Africa and NBA China. I mean, they have their hands in a lot, and you are going to own 1/32 of the league. And so that is a huge selling point to anybody coming into the league right now, beyond just their own local market and those revenues that they control.
I always think, Kurt, like one, who writes these big checks to buy a team, but also the return on the investment. I mean, how do they make money back after putting out $4 billion for an NBA franchise?
Well, the control owner has a lot of tools, a lot of levers they can pull. So Steve Ballmer pays $2 billion, crazy number, so much higher than the media valuations at the time, and so much higher than any bankers thought. But for the owners, they can come in, and it's basically an incredible tax write-down because you amortize the whole purchase price and can use it to offset other income, because it's all an intangible asset. There's very little tangible assets when you're buying one of these teams. It's mostly all brand, goodwill, whatever you want to call it, but it's intangible. And so you can write that down over 15 years. So someone like Steve Ballmer, he's been, knocking off $130 million every single year on his Microsoft dividends. So that person, it's a tax opportunity. But the ROI, and most of these now are cash flow positive too. So it's not like you're writing a check. Some people spend, the Nets spend wildly before paring back this season, and so they're going to lose money. The Clippers, until they move into their new arena, have been losing money. Again, Steve Ballmer can afford it, but he's paying a $100 million tax bill now, and he's the third tenant in the Staples Center. Makes no money. But again, once he moves into his new arena, they're going to be a top 5 club. So they are profitable, and we have seen over time value appreciation. Is it a bubble now? I don't know. I've been hearing it's a bubble for 30 years, but the values keep going up and up and up. And now with private equity coming in, I mean, these guys, their sole job is to make money for their shareholders. There's no vanity play here. They're not getting a good parking spot by buying an LP stake or season tickets or whatever. They're strictly investing in these for a financial return. So whether it's Dial or Arctos or 6th Street, and new funds are popping up all over the place. They're looking to invest in sports. They're doing it strictly for return on investment. There's less correlation versus other assets. So while other assets might have a ton of volatility, those historically have very little correlation to franchise valuation changes. And franchise valuation changes too, because you have all these deals that are long-term, locked in, media, sponsorships, luxury suite sales. Even during bad times, the valuations don't plummet by any stretch because you have all these contractually obligated revenues. So they are solid investments that again, I can count on one hand over the last 50, and I only need a couple fingers over the last 50 years in terms of investments that sold for less than the original amount when it comes to sports teams. So are they going to have the same growth where the NBA, they're up basically 10x over the last 12 years? Probably not. I don't think the average team is going to be 40 billion over the next 12 years. But I think you will continue to see steady gains in franchise valuations.
So, Kurt, this has been good to talk through the numbers. I think I want to end on a positive here, though. It sounds like you do think that expansion is coming, and that conversation will start after the TV deal is done, perhaps early next year. How do you think this plays out for those Sonics fans who are now going on 15 years without a team? When do you think that expansion talk starts? When do you think a team potentially could begin playing it in Seattle?
Yeah, I mean, the timeline, we mapped it out a little bit during our NBA franchise valuations and talked to a lot of people. And we're trying to also put the brakes on a little bit because, LeBron's going to play his last year at his own expansion team in Las Vegas. That's not happening. These things do take time. Again, as I said earlier, the NBA wants to make sure they have the right owner, the right city, the right building. Those three have to be in place, and then the right price. It's got to make sense because you got to get the owners to sign on. So I think you are looking at a TV deal that is done sometime in the second half of 2024. Sometime from June to December would be my guess. And then those conversations ramp up. And listen, people are working behind the scenes right now. This isn't like the NBA goes out on December 1st, 2024 and says, "Oh, we think we might expand. We're going to look to expand now." People are lining up, getting behind these potential situations, and so you could see something move really quickly. Where 12 months you have everything all locked up. So I think, but before 2030, people are taking the courts in these two cities. So that would be my guess. I think you're looking at 28-29 season is probably the earliest you could see the teams happening. But yeah, I guess maybe at a fast track 27-28 could be on the table.
Well, that'll be, close to 20 years at that point. So we will indeed see. Kurt Badenhausen, thank you so much. He's the sports evaluation reporter for Sportico and was at Forbes before that. He's been talking about franchise valuations and expansion of all the leagues for so many years. Kurt, thank you so much for taking the time here on Iconic Sonics.
Thanks so much, Chris. Fun to be on.
That wraps up another great edition of Iconic Sonics. Thanks to my partner, Chris Daniels, for handling the hosting duties today. And thanks to our guest, Kurt Badenhausen, for all the inside info on the business part of bringing a team back to the Northwest. Thanks to all of our great Iconic Sonics sponsors. You can get more information about our sponsors and about upcoming shows at iconicsonics.com. Thanks for listening. I'm Mike Gastineau. We'll see you next time on Iconic Sonics.